are not done with trading strategies. We still have to give you F&O strategies, and we have Chandan Taparia of Motilal Oswal Securities for that. Good morning, Chandan. Thank you very much for joining us. What stocks are you trading today?
Yeah, good morning. We have seen extended selling pressure in the market. It has been forming lower highs, lower lows. But again, stock specific action is there. Call writing is visible, so that is going to restrict the upside momentum. So selected to be with couple of buy and sell ideas looking at the entire market sentiment. First trade is buy on Jubilant Food. This stock has been forming the higher highs, higher lows from last 4 or 5 trading session. It has given a breakout from a small symmetrical triangle and also surpasses falling supply trend line. So comparatively, this stock looks good, quite promising for an up move towards 1390. So recommending to buy with a stop loss of 1300 for the higher targets. Second trade, that is on Axis Bank. Just a couple of weeks back, the stock has taken hurdle at 680 zone, and after that it consolidated and moved higher. And recently, at the time of decline, it has exactly taken the support at previous swing high resistance zone. So because of that, it seems that decline of last couple of trading session is going to hold, and up move could be seen. We have seen put writing in the counter, and the support-based buying could take it to higher zone. So recommending to go long on Axis Bank with major support of 680 for an upside target towards 720. Third trade, that is sell on ACC. We have seen selling pressure in most of the cement counter, and ACC has been making lower top, lower bottom. We have seen open interest addition of around 10 to 12% in the stock on the short side in last 3-4 trading session, and it has broken all immediate major support and trading below all the moving averages. So weakness could continue in the SEC. One can sell with a stop loss of 1360 for the downside target was 1288. One more trade, that in the put side, ITC. The stock has been finding multiple hurdle near to 284 in last 13-14 trading session. We have seen sustained call writing, shorts are intake, and stock is not ready to surpass the immediate hurdle zone. On last trading session, it has given the breakdown and all set to go on the lower side because put unwinding started to seen with built up of short position. So recommending to buy 275 put with a stop loss of 2, and this put can move to us 11 rupees.
All right, Chandan, thanks a lot for joining us and giving us those trading strategies. But moving on and talking about some big corporates now, the core strategy of Nestle has been penetration-led volume growth. That's the word coming in from Suresh Narayan, the chairman and MD of Nestle India. In an exclusive conversation with our colleague Anush Sharma, he spoke in detail of the company's increase in advertising and promotional expenses and the strategy going forward. Here's an excerpt of that conversation.
One of the core foundations of the Nestle India business model has been a model that centers around increased volume growth, increased penetration, and increased brand salience. It also hinges crucially upon innovation and renovation as a driver of growth. And indeed, what you have witnessed in the last quarter of last year has been a very strong statement around that. Okay. Now, clearly, as you alluded to, new innovations and renovations do demand an increased level of advertising and promotional expenses, and we've increased ours in the last quarter of last year by almost 370 basis points over the previous year, the same quarter. Remember that the previous year, the same quarter was also slightly depressed because of the GST introduction during that period. Having said that, in absolute terms, there has been a clear shift in terms of the advertising and promotional spends. We have spent almost 30 to 40% of our monies in the last quarter of 2018 to support the new launches.
So traditionally, the company has spent 5 to 6% of its sales on advertisements. So going forward, will that ratio increase or decrease, or would largely remain around the same range?
Look, I think a lot of it would depend on the kind of traction that the innovation, renovation, and indeed the competitive scenario commits us to putting behind the brands. So in the ballpark range that we closed last year, 2018 full year results with about 6.5% to sales as the advertising and promotional ratio, up from about 5%, so about 150 basis point increase. The fact of the matter is that the levels of engagement and commitment that we'll have would continue to be as strong.
You've launched around 45 products in the last 2 years. So how much are these products contributing to your current revenue? At what scale are they growing? And what is the target for these products?
You see, we have launched close to about, I think, 30 to 40 new products that we have introduced in the last 2 to 3 years. The contribution levels started with about 2% of total sales. Okay. They closed last year with about 3.5% of sales. Ballpark, the kind of number that we would look at is anywhere between 3 to 5% of sales as a sales contributor, right? Not incremental growth, but as sales contributor. And I believe that this kind of emphasis would remain in the future as well, that we would like to have innovation and renovations to generate these kind of numbers.
Talking about raw materials, whether it is sugar, milk powder or wheat, they have been inching up, and that may cap your margins going forward. So what kind of inflation growth have you taken into account for the input basket? What is your outlook on the input cost environment?
Look, I think you're right to say that some of the input costs are clearly going northwards. Typically, what the strategy at Nestle Anu is to try and see how far we can mitigate the increases in any of these costs that you're talking about, whether it is milk or wheat flour or any of the other ingredients, in terms of our own technological capabilities that we have as a company, our economies of scale, or any other sharpness that we are able to show in the procurement cycle to be able to mitigate these costs. It's only if these are impossible to be met do we look at price increases. Remember, the core strategy of the company is penetration-led volume growth. So if I'm not able to manage this astutely and well, then I'm going to be stalling the growth engine that we have taken all the pains to build up in these last couple of years. So therefore, I think there will be some categories where there might be a price increase that might be warranted. I don't see this immediately happening, but it is definitely something that we will watch for very, very carefully.
Okay, I know he was talking a lot of business, but I could only focus on that cabinet right in the middle where I saw Maggi, Kit Kat, Munch and Nescafe, I think. So I'm getting very hungry. Let's take a quick break on that note. On the other side of the break, Prakash Diwan will join in to give us some fundamental ideas, and then we'll also come back in time for the pre-opening rates.